All right, so this Elon Musk drama versus Twitter is just getting out of hand, and it's getting very, very complicated. So yesterday we had a ruling from a judge that basically delayed the trial from October 17th to sometime in November. That's because the judge realized, hey, okay, well, it looks like you guys have a deal that looks like it might commence on or around October 28th. You guys will have your deal complete. So if the transaction doesn't happen to close by 5 p.m. on the 28th, why don't you just email me, the judge here, and we'll set a trial date for November 2022. So basically, Elon Musk buying a month. He didn't go to his deposition, which would have probably been a pretty ugly deposition unless he pulled a Donald Trump, I plead the fifth, which generally is not the best thing to do in some cases, although some attorneys say, no, it is the best thing to do. So I'm not going to get into whether or not that's what you should do or shouldn't do. This is going to turn political really fast otherwise. But anyway, what's interesting here is that yesterday I made a little bit of a mistake. So there's this debt financing commitment letter that was originally filed around April 21st on the SEC website that shows that Elon Musk's $13 billion of debt financing expires on October 20th, which that was actually really interesting in terms of timing because the trial was set for October 17th, then got pushed to after October 28th, which that would be past this financing commitment, which would enable basically the banks to say, bye, we don't want to do this deal anymore because we're going to lose hundreds of millions of dollars on it. And if Elon can't get his debt financing, he actually has the right to walk away from this transaction and pay a $1 billion termination fee. So his deal is contingent upon financing. Now, Bloomberg doesn't seem to think that's the case. Bloomberg is making the argument that no, he actually, in the original contract, had no contingency for financing, and now all of a sudden he's trying to weasel in this contingency for financing. And I'm like, Bloomberg, did y'all read the cancellation rights? Because they're literally right here. This is I'm using my iPhone right now because for some reason my iPad HDMI port's not working, but this is the iPhone 14. It actually works really well for this. This is the clause here that says the merger agreement provides that Twitter and the parent, blah, 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 may cause Elon Musk basically to go hard in terms of his equity financing commitment. But if for some reason the debt and margin loan are not available, which are seen right here. Now, Elon's already killed the idea of using margin, so that's gone. But right here, this debt and margin loan financing, if that is not funded or not available, as we see right here, then parent, which is Elon Musk, will be required to pay Twitter a termination fee of $1 billion. Now, you can read the legalese there. I'm just kind of summarizing that right now, right? So in summary, looking at the termination right, it's like, well, it's right there. There's a contingency for debt and margin loan. So I don't know why Bloomberg is making this argument that, oh, he doesn't have a contingency for financing and he's trying to weasel that in. That's not the case. He's always had a contingency for financing. But financing, the original financing agreement had an expiration date of October 20th. However, it looks like there's a new financing agreement that actually included a 6-month extension all the way to April 25th. So this complicates things a little bit because is Elon actually going to be able to delay this trial to April to get that debt financing to expire? It's possible, but it would take a lot of effort. So this is not as cut and dry as we thought it was yesterday because that debt financing is actually still going to be around for another 6 months. Now, what is interesting though, and this is a very complicated section to read, and I'm not an attorney, so I can't even tell you if I've read it correctly, but my understanding here is, and this is in the debt financing commitment letter, my understanding here is that there is a minimum equity contribution required in this deal, and it is set at 40%. Now, I think that's really interesting because it makes me wonder, okay, well, if for example, $13 billion of debt is to represent 60% at max of the financing, which would mean the rest is 40% equity. Well, then if we go to a calculator and we say, all right, $13 billion represents no more than 60% debt, then the minimum valuation of Twitter would have to actually be about $21.6 billion. And that's really simple. You just $13 billion divided by 0.6. And that would mean the minimum equity is the difference. So minimum equity in this case would be 8.6, right? And the valuation would be 21 bill in that case. Well, we know that the deal is actually being done at 44 billion, so that shouldn't be an issue, right? Maybe. So some people are now speculating that it's possible that the banks could say, thanks to this particular clause here, the banks might be able to say, hey, you know what? The fair market value, not what you're paying, but right here, the fair market value of Twitter is actually a lot lower than what you're paying. Therefore, we're going to kill the financing because we don't think the minimum equity is in effect. Now, to some extent, people believe that this is a possible out for Elon, but it would be a really probably bad look for the banks to renege on their debt financing commitments, and they probably lose some clout on Wall Street, unless, of course, Wall Street is convinced that Elon is overpaying by that much, and people are like, yeah, no, we don't blame you, banks, for pulling out. But then again, you know, Elon well, okay, I'm not going to make a joke here. Never mind. So it's going to be a pulling out joke, and, you know, Elon doesn't generally pull out, you know, so it's kind of unique, you know, we got to help population. Anyway, I told you it was going to be a bad joke. So anyway, what the other option is that Elon Musk potentially then just kicks the can down the road until April, but that would take a lot of gamesmanship, which some people are actually saying is potentially exactly what's happening, because now there's talk that, well, if Elon Musk is supposed to close his deal in the next 2 weeks or 3 weeks here, then he should have been already talking to banks to say, like, hey, like, get ready to send your money. Like, it doesn't just happen overnight to send your money. Like, it's going to take some effort to send your money over. And rumors are, from people not authorized to talk on this, so this is sort of as reported by the Wall Street Journal and Bloomberg and such, rumors are that Elon Musk has not yet contacted any of the banks to tell them, like, hey, get the financing ready, like, I'm serious about closing. So this is sort of raising the prospect that, oh, Elon is just playing games here, and now he's going to do whatever he can to milk the clock. You know, apparently he delayed his deposition for fear because, you know, somebody on his legal staff was potentially exposed to COVID. And so it makes you wonder, like, okay, we kicked this into November. Oh, well, now we've got, you know, the Black Friday sales events or whatever for Tesla or whatever you want to argue, or, oh, the holidays, it's Thanksgiving, oh, now it's Christmas, and then, you know, what are we going to say the January problem is? Oh, no, I don't know. I mean, maybe you can kick the can down the road, but I don't think the judge is going to play with that and let this go until April. Remember, Elon Musk and Twitter and Tesla, Elon's legal team, originally asked for a court date in April. Originally, like way back in the day when they were trying to cancel this deal, they asked for a court date in April, which kind of makes you wonder, like, oh, you guys were trying to get that financing to expire, and the judge is like, no, I'm going to go for October. You know, it kind of is all lining up. They're trying to milk the clock to April here. And you know, other people are saying, hey, but what about, like, what if his other equity partners don't come through, and could this create selling pressure on Tesla? Well, that clause is actually right here. It's section 9.9. B, I think it is, 9.9B, in the termination section here of the original agreement. And section 9.9, highlighted in yellow here, basically says the company can force Elon to come up with all of the equity that's required in this deal, which is somewhere around $31 billion. So if Elon gets equity partners of $20 billion, great, then Elon has to bring up $20 billion less. But if they all bail, the company, Twitter, can force Elon to come up with the full $31 billion. But the only contingency he has is that $13 billion of debt financing. That's an actual contingency that he does have. So again, you know, why Bloomberg, and I'll show you what they're saying too, and I just think it's ridiculous. But why Bloomberg is, and then I want to talk Tesla really quick because it's just having another terrible day in a row again. I feel like I'm melting away here. But anyway, Bloomberg had the following to say, which I posted on Twitter. Follow me on Twitter if you don't yet. But they had the following to say here on Twitter. Talks between Elon Musk and Twitter to reach an agreement, blah, 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 blah. Here. The billionaire's lawyers say that Musk was willing to do 5420 pending receipt of proceeds of debt financing. And then they write, the original deal didn't contain such a contingency. And I'm thinking to myself, like, what's your agenda here, Bloomberg? Because, like, I don't know about you, and again, maybe because I'm not an attorney, I'm just reading it wrong or something like that, but I'm pretty sure the cancellation right for Elon is pretty clearly outlined in the original agreement up top here. And, you know, you can pause that and read it yourself, but I'm pretty sure that top section there basically says that margin loan financing and debt financing has to be funded or available. It says it right there. So I don't know. But what I do know is that Tesla stock is falling, and it's probably, honestly, a lot, I think, has to do with the overhang. Well, not only the macro overhang that rates are going to go even. Oh my gosh, it's at 228 now. Are you serious? Whew, whew, we're about to get some retail capitulation. Holy crap. Dude, look at my Weeble. Okay, this is disgusting. You can see my Weeble cost basis, which is not everything I have on Tesla, but you can see my Weeble cost basis. Oh, I'm getting effed. Oh, it feels so good. Anyway, so, no, it actually is pretty miserable. But that's okay. So, you got to go through the pain to have the gains. Oh, God, that sounds so corny. But anyway, some of this overhang is because of Twitter, because people know, like, if his equity financing partners bail, Elon's going to have to come up with the rest, and he's going to have to sell more. Tesla is his piggy bank. So to suggest that there isn't an overhang of Twitter over Tesla, wrong. There's a massive, massive overhang. It's terrible. It's painful. And of course, I'm at a hotel traveling, and the market's crashing. Well, the good news is you could still get that lifetime access. Still working on getting the Shopify store up for that new product we're launching, and then lifetime access is getting stripped for some of the programs. I'm building your wealth link down below. Join those. Remember, if you are an accredited investor and you want to build a wealth through investing in real estate without you having to do anything, househack.com. Read the solicitation, the PPM. Make sure you get a letter from InvestReady. The easiest thing you can do is you go to househack.investready.com. They get you a letter for $49 to say you're accredited. It makes it easy on us as well. It keeps our staff costs down, which are good for you. I'm a big fan of keeping staffing costs down because that is good for investors. Number one thing that leads to bankruptcy is too much staff, too much employee overhang. And we're going to be buying the dip like crazy in real estate, which we really expect to take foothold next year in various different markets. Whether that's, we don't know what markets yet, whether that's Salt Lake, Seattle, South Florida, North Florida, California. We've made no commitments. I was just in South Florida, but I'm not even convinced. So we're just going to have to see where markets go. But anyway, if you have questions, you can go to metkevin.com/chat, and you can ask any questions that you want about HouseHack. There's a public section, so you don't have to pay anything to join that. And you can just tag me, @MeKevin. Hey, Kevin, have a question about this. Ask it. Even if it's been asked before, I'm happy to answer it. And yeah, thanks so much. Really appreciate you, and just good luck out there, folks. It's a nasty time. Good luck.